Hi, this is Kerry Artek with Wicked Stocks bringing you an update on the TLT, that is the iShares 20-year plus Treasury ETF. The last TLT update I did was about a month ago, early April. Let's jump to the charts here, take a look. At that time, we were in the process of, we broke this channel bottom. This is a long-term channel bottom. It's a structure that is trend defining. We have violated it. So there was the potential. We had bottomed out there for a number of weeks, maybe a month or so, without a follow through rally, no recovery really appreciably off of that channel bottom. And then the first week of April, the week of Monday, April 4th, I saw this happening and I put out a quick video. You should be able to find that on YouTube actually if you wanted some recall on that. And I'd mentioned that if we closed below that formation by a 1% margin, which we clearly did later that week, that sets off a long-term sell signal. The first target in terms of the big picture, a 2 to 3 month objective, and we're probably 2/3 of the way there now, 1 month in, is the 108.69 descending channel bottom, which is dropping at 28 cents a week. So this remains our objective. At the current rate of descent, we may well reach it by the end of May, perhaps the next few weeks, or that could spill into June. But I'd say somewhere in that area. And then preceding 108.69 is this former 2018 low. That was a significant low. As you can see, it is the lowest the market had been in 4 years at that point. And then we rallied off of that low. Not that that low was significant in terms of technical support, but it was the lowest we had been. It is a low that is there. How many times am I going to say this? It's a 5-7 year low. And so 111.90 precedes it. I don't see that as a significant support, but I do think we could get a nice bounce there for at least a week, perhaps longer, perhaps several weeks. And then, of course, closing below 111.90 should be an accelerated or maintaining that accelerated descent to the 108.69 target. It remains a 2 to 3 month objective. We're about a month into it, so we've got another month or two to reach it, and I think that is quite realistic. 108.69 should be respected for its ability to contain quarterly selling pressures. So if we test it, let's say in early June, that could put us into August, September, something like that. Perhaps longer. It depends, of course. This is interest rate. The environment that we're in right now is one of rising interest rates. The Fed raised a 0.5 point the day before I shot this video. And and we still have high energy prices. We still have inflation as a concern. There's still the concern for a global economic recession. And if that does pan out, if that does actually materialize, a true global recession, that's of meaning, then of course you're going to see interest rates probably back off a bit. And so that's the case for 108.69 actually being able to contain selling into later year. This is a significant channel bottom in and of itself, but it's just that the 129.56 channel bottom goes back some 13 years. And I think it defines sort of a kind of a grand cycle to some extent with regard to the interest rate outlook. So we are in a rising interest rate environment for the next few years below 129.56, and I'll get to those lower price potentials in a moment. It's just that the 108.69 is more midterm, and it could contain quarterly selling pressures, possibly into later year. But if the battle is going to be fought, it is likely to be won by, if you will, the 129.56 channel bottom, which I think is indicating probably the lower 80s over the coming next 2 to 3 years. And I can show that by, actually what I'm going to do here is zoom in a bit and show you. I'll get to the lower levels in a moment, but I'm going to zoom in here a little bit and show you some of the more finessed levels. There's a 117.07. This is for those of you who want more than just the broad brush stroke. You're actually trading the TLT. You're wondering if you should stay in where you should bottom pick, if you're long right now, so forth and so on. So 117.07 is a mid band of that channel structure. And it actually was holding this week quite well until the interest rate hike that occurred on Wednesday, May 4th. and we have violated it now. So assuming we settle the week of Monday, May 2nd, that would be Friday, May 6th, below 117.07, we should test 111.90. I'm going to say next week. And over the next 3 to 5 weeks, 108.69 is likely. That's what I'm seeing here. That's what looks to me to be likely. Holding below 117.07, we should, let's just say by the end of June or sooner, actually reach our objective at 108.69. Where that is actually the very end of the second quarter. We could bottom out through the third quarter, which would put us to October 1st. So from there, could we rally back to 129.56? Sure, anything is possible, especially as I say, if recessionary environment does emerge over that time horizon, and we're in a real sort of official recession. It's been quantified. We could rally back to 129.56 in the months to follow a test of 108.69. But there's, I think, in terms of the long-term outlook, and this is a monthly chart. So everything I showed you up to that point was a weekly chart. All those rates of descent and rates of rising, by the way, you can note for yourself and monitor these through time. The 108.69 channel bottom is dropping, for instance, at 28 cents a week. So you can watch that. You can monitor that. That will remain a valid support level, into later year. And if you just subtract 28 cents a week from 108.69, for instance, next week it'll be 108, 41, so forth and so on. If we do close below that formation 108.69 at the end of any week, and you do want to add the 1%, so that would be 1.08 below 108.69, for instance, this particular week. Then we enter a secondary phase of selling, and this is the area. The 68.69 is a targeting mechanism. It is nothing more than the full channel extension of the previous channel that existed, the bottom of which was 129.56. So I think this is what is possible. I don't think that price level is necessarily possible, but I think that full channel extension is possible. And by a year from, a couple of years from now, I should say, it actually lines up in the second quarter of 24 with the descending channel bottom, for instance. So let's say we bottom out at 108.69, through the third quarter or into the third quarter, and rally up to 129.56. I mean, the truth is, we could look back on this later this year and say, hey, 108.69 actually contained the annual lows, but we're merely retracing back up to 129.56, which is the more meaningful level. From there, we could fall off through next year, 129.56. I guess what I'm saying here, and I'm trying to say not so eloquently, is that holding below 129.56, I do think the lower 80s are potentially in reach over the next several years. And in fact, that would be accelerated. I should put this out there too, that if we were to close below the 108.69 formation in the coming weeks, and that is possible, then I think within a matter of, this is a monthly chart, so that could take the better part of a year to continue south into the lower 80s, 8 to 12 months, let's say, if you just kind of can imagine counting the bars all the way down. If we were to close below the 108.69 formation by a 1% margin on a week-by-week basis, I do think the lower 80s, which is the lowest this fund has been, those are the 2003, 2004 lows, and you can look back to the far left of that chart and see there's a lot going on there in the low 80s in terms of the base of an old congestive bottom area that played out in the early 2000s. I think that area is in reach over the next couple of years below 129.56. The confirmation for me for that idea would be a settlement below 108.69. And then we have kind of an accelerated descent into the lower 80s, as I say, within probably 8 to 12 months. But for right now, I do think if we're looking through, let's just say through the rest of the year, we could bottom out at 108.69. That could be a quarterly low. And from there, we could rally over the course of a full quarter or two back to 129.56. And so, as I say, while it can contain quarterly selling pressures, we may look back on it as an annual containment. And inversely, if settled below, which it is highly susceptible of, then we just have further price erosion and a pretty accelerated pace, the lower 80s than expected within a year of doing so. Let's zoom in just a little bit. I'm going to show you this 117.07 again, the 111.90. Zoom in one more time. I want to just sort of finesse the possibility of a buy signal, and it's actually not going to be. I'm not quite sure. I'm a little mixed as to why I should even show it, but it is sort of an example of what is a buy signal right now. As we continue into later May, as we continue into June, and that would be a settlement above this structure right now at 119.69. This is a weekly chart. Once again, I'm back to looking at a weekly chart. So for this week, the week of Monday, May 2nd, we have 119.69. And I do believe, as I'm recording this, we've already taken out that low. You see in the upper left of 115.33. I think the low today is 115.31. So as we continue putting out new lows, that 119.69 formation gets reconstructed, and it will become lower in price. I think, though, for reliability's sake, or roughly thereof, 117.07 is a decent pivot point into later May, below which the 108.69 level is in reach over the next 3 to 5 weeks, and above which we've got a stable sort of dynamic as we continue into later May, and of course closing above 119.69, the level that I'm reluctant to give you because it's kind of ever-changing, would be our upward pivot point. It would actually reverse momentum. Whether we would rally back to 129.56 is really open to debate. I doubt it. I do think that this market, if it's going to test either 108.69 or 129.56 over the next few months, it is likely, very likely, to be 108.69 before 129.56. And I will say that if we do close above 129.56 at the end of any week, then I think we have a good annual low in the TLT. And this whole interest rate, this trend in rising rates, will be put in serious question as to whether that'll continue through the rest of the year. And I think that I've said enough. 13 minutes plus. That's all I've got. Remember, wickedstocks.com offers 2 stock picks a week beyond anything you ever see on YouTube. They never even show up on YouTube. 8 stock picks a month. And the weekly DIA, Dow Jones Industrial, the weekly IWM, the Russell 2000, and the weekly Bitcoin. You get all of that for $25 a month. So keep that in mind. Now, of course, I also do the daily SPY report and the daily Triple Q report. They're both $25 a month. But you can combine all of what I just said, everything I just said, for $50 a month. Anyway, that's all I got. 15 minutes. Thanks for watching, and we will talk soon.